Tyler is a 58-year-old facility supervisor in Barrie. During the week, he works for a school board. On weekends, he picks up shifts as a security guard at a concert venue. He has been doing this for 3 years. Every April, he owes the Canada Revenue Agency somewhere between $2,000 and $3,000. Last year, it was $2,847. His wife thinks he is doing his taxes wrong. His accountant told him everything is filed correctly. They are both right about different things, and the problem has nothing to do with how Tyler files. It has to do with a form he filled out on his first day at each job and never thought about again. Here is how the problem works. Every employer in Canada uses a form called the TD1, the Personal Tax Credits Return, to calculate how much tax to withhold from each paycheck. The TD1 asks about your personal tax credits, so your employer can approximate your annual tax bill. The most important credit on that form is the basic personal amount. For 2025, that is $16,129 federally. The first $16,129 of income every Canadian earns is effectively tax-free. Your employer factors that credit in when setting your withholding. Here is the trap. When Tyler started at the school board, he filled out a TD1. The school board gave him credit for the full basic personal amount, $16,129 of tax-free income, and withheld tax accordingly. When Tyler started at the venue, he filled out another TD1. The venue did the same thing. Both employers assumed Tyler's other $16,129 was available. It wasn't. You only get one basic personal amount. Tyler was claiming it twice, once at each job, and neither employer knew the other existed. Most people assume the problem is the second job itself, that earning more income pushed them into a higher bracket, and that is why they owe more tax. That logic is backwards. Tyler would owe more tax at a higher income no matter what. The specific problem, the $2,847 bill, is not about the bracket. It is about the credit being claimed twice. If Tyler earned the same $80,000 from a single employer, his withholding would be exact. 2 employers, same income, and suddenly he is under-withheld by nearly $3,000 every year. Here is the 5-minute fix. Tyler needs to complete a new TD1, both the federal version and the Ontario provincial version, for his second employer, the security company. On that form, on page 2, there is a box specifically for this situation. It says, check here if you have more than one employer or payer at the same time. When Tyler checks that box, the security company stops applying the basic personal amount to his paycheck. From that point forward, they withhold tax on every dollar as though each dollar is taxable from the first cent. The under-withholding stops. The April surprise disappears. Tyler can also request additional withholding, a flat extra dollar amount for paycheck on the TD1. If he calculates that he is short about $2,800 per year, dividing that across his 26 biweekly security shifts means asking them to withhold an extra $108 per shift. That is it. The form is free on the CRA website. It takes 5 minutes, and it ends 3 years of annual bills he never understood. The same problem applies to retirees collecting a pension and working part-time, to anyone drawing from a RRIF while still employed, and to anyone receiving CPP while also receiving employment income. Any situation where 2 payers are each running withholding calculations independently without knowing about each other creates the same gap. The TD1 is how you close it. Tyler submitted the updated forms. His next April will look different. Full breakdown in the comments.